The following podcast was recorded on Thursday, March 10th, 2022, featuring Sam Rines of Arbor Data Science. To hear the podcast in real time, you can sign up for a free trial at arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to the latest edition of Talking Data. I'm your host, Kristen Radosh with Arbor Research and Trading, joined today by our commentator, Sam Rines of Arbor Data Science. Welcome, Sam.
Hey, great to see you, Kristen.
Good to see you. Today, Sam's going to explain how supply chains and war do not mix well. So, Sam, inflation pressures are being blamed on the war, but inflation was in the system prior to the war, being driven by demand outstripping supply. What are your thoughts?
It's kind of funny how all of a sudden inflation is being blamed on a war that started 15 days ago, right? It's one of those interesting narrative shifts that happened really quickly, and to a certain degree, it's true, right? You are seeing inflation pressures accelerate, being made worse by the war in Ukraine, but that is far from call it the start, the underpinning of the global uptick in inflation, right? It's not just a US problem, it's also a European problem. As we've heard from the ECB, it's also a UK problem, as we've heard from the Bank of England. This is a global thing. Unless you have some sort of insulation from having to buy anything, you're seeing an uptick in inflation pressures globally. It was interesting, prior to the invasion of Ukraine, we kind of had this feeling that you were going to begin to see supply chains heal themselves. China's manufacturing coming back online in a meaningful way. Maybe some shipping bottlenecks were going to begin to unwind themselves. A lot of that now has been pushed out, at least 6 months, if not 12 and 18 in other cases. And I think that's something that we need to keep in mind, is that while supply chains were healing, that healing is going to be delayed, not just because of the war in Ukraine, but because of the spiraling effects thereof. Higher diesel prices, higher gasoline prices, those go into shipping costs globally, that goes into inflation.
And we have a chart on air freight, if we want to just walk through this.
Sure. So the interesting part about air freight here is that you tend to use air freight for high value goods that are fairly light. So laptops, semiconductors, that type of high value add product. But you also have to bid against each other. And so we've heard some interesting anecdotal evidence from places like HP and Dell that they would have to bid against one another to get their laptops on a plane, or semiconductors on a plane, to get them from point A to point B, pushing up the cost, right? You can see that here. As soon as we hit the COVID crisis, you had a massive uptick in air freight costs, and that's kind of a twofold issue. One, and probably most importantly, when you don't have as many planes flying, there's less belly room in an airplane to put goods, and that makes it more expensive to ship them. We simply haven't seen a comeback in air travel that has been anywhere near enough to begin to bring these prices down. And that's going to be exacerbated. Again, this is a little bit of call it a tangential effect of the war. It's going to be exacerbated by the fact that planes have to fly a lot further now to get from point A to point B on a global basis, right? We have Russia shut down its airspace to people who shut down airspace to them, in kind of a tit for tat type deal. So it takes longer to get from Asia to Europe now than it used to. It takes a lot longer to get from places like India to Europe, and that's not going to help this at all. Another interesting point here that I think is being overlooked in the whole supply chain dynamics here is another thing that we were kind of beginning to see signs of an alleviation from, is the semiconductor shortage. We were beginning to see signs that maybe we were having some turnaround there. That is probably getting pushed out at least 6 months, if not 12 months, by the war in Ukraine.
So you mentioned China. What happens when China's economy begins to reopen? How does that impact the supply chain?
So it's interesting. That should allow for more goods to be made, right? We need China to really ramp back up in terms of production in order to alleviate some of the shortages of goods that we manufacture there. That's one piece of the puzzle. Another piece of the puzzle is that shipping costs, container costs. I think we have a pretty good chart on that. Shipping costs, even with China not running at full pace and having a zero COVID policy, container prices have skyrocketed, and we had a little bit of an alleviation there, but not much. I mean, it's still significantly elevated relative to anything that we had expected coming into 21, or call it into 2020. Once you begin to need more vessels to put more stuff on, it's going to exacerbate or potentially exacerbate this in a meaningful way. I think that's something to really keep in mind, is if we're going to have more goods to put on ships, and we're already paying a lot for containers from point A to point B, if you increase the demand for containers, it's likely that you're going to increase these prices as well. So there's a significant problem here in terms of pricing that isn't going to be alleviated by turning back on, and may actually exacerbate it somewhat. Not to mention, again, adding in bunker fuel costs, diesel costs, etc., for having these ships cross the ocean. Those prices haven't gone down.
Can you talk about what other large risks are kind of looming out there? What should we be watching for?
What we should really be watching right now, in my mind, is the problem with semiconductors. And kind of going back to that, it's worth noting that Ukraine is more than 50% of the global neon market. Neon is something we kind of think of as the cool signs that we put up on a wall, but neon is an incredibly important component for making semiconductors. You actually use neon in the lasers that then etch the chips and make a semiconductor. We probably only have about 2 months of stockpiles on hand, generally, that we can use. So if you continue to drag out the war in Ukraine, continue to not have the ability to push things through to global markets, that's going to further delay the semiconductor industry in a meaningful manner. We saw it in 2014, 2015, when Russia annexed Crimea. That caused a significant problem for semiconductors. We were already having a semiconductor crunch coming into the current war. That's going to exacerbate this and probably extend any sort of meaningful recovery in semiconductors another 12-ish months. So I think that's probably one of the most important pieces of the puzzle to watch, particularly because of just how many semiconductors we need and how many goods those actually go into. So I'll be very curious how this plays out over the next 3 to 6 months.
Any final thoughts for the week, Sam?
Ooh, final thoughts for the week. Further volatility. I mean, I don't think I've ever seen a market that has been limit up, limit down on wheat in, I think it was half an hour. Those were incredible moves. Oil from 130 to 110, back to 120, back to sub 110. I think we're in for more of the headline game, and the longer the headline game goes in terms of trading, call it the more worn out the market will get with playing the headline game. And we have the Fed next week. So we're only going to have more headlines, and it's only going to get a little more complicated to parse through things. So more headlines, not so much fun.
Well, thank you, Sam, for your thoughts today. We appreciate it. And thank you, everyone, for joining us. As a reminder, Arbor Research and Trading is an institutional research and brokerage firm. Our 2 most prominent offerings are Bianco Research and Arbor Data Science. For further information or any questions, please contact Gus Handler at gus.handler@arborresearch.com. Have a great day.